sales value which have a smaller sales value. The other word we can use is that it has a sales value which is insignificant compared to the main product. So the question then will be, how do we account for these incidental or secondary products that are produced in the process of producing the main product? Now, mainly we will have 3 treatments. So this I can say here, treatment. And it's good that you can be able to remember the 3 treatments. We will, however, use 1 treatment, but I'll just mention the 3. So 1, we can say you can treat as additional income. Or let me say, treat it as additional sales. If you like, you treat this as additional revenue. So if I was to present an extract of the words of the income statement, then this is how it would look like. So we say extract of income statement, the extract of our income statement. So I will say here, this will be sales from the main product, sales from the main product. And I will present that value here. Whichever units I'm using to measure, I'm using shillings in this case. So we say sales from the main product. Then now I say add the sales from the byproduct. The sales from the byproduct. And this will give me my net sales. This will give me my net sales. Then when I get my net sales, I can now say less or subtract the cost of production. We subtract the cost of production, and this will give us our net profit. This will give us our net profit. So that's the number 1 treatment. You can take the sales or the revenues from the byproduct and you simply add it to the sales of the main product. In that case, you are treating it as additional revenue, Second treatment, that is treatment number 1. So the second treatment, we can say, that is number 2. We can say treat the sales, or we can say treat as miscellaneous incomes. Maybe here we can say treat the sales proceeds, from the byproduct. You treat the sales proceeds from the byproduct as a miscellaneous income. So that means you just add it to other incomes. Now, how will that look like? Let me do an extract of your income statement. This would look like this. So always start with sales revenue from the main product. The sales revenue from the main product. Then you say less the cost of production. So I subtract that one here. And so when we take sales, we less the cost of production, the value we get here, we will call it gross profit. Then we will say add other incomes. And this is what you do in financial accounting. So one of the other incomes here will now be sales proceeds from byproduct. So I say sales proceeds from the byproduct, and I add it there. So I have gross profit and I have other incomes, and one of those other incomes, I may not present them all, but I'm saying one of the other incomes will be the sales proceeds from the byproduct. Then you will subtract the expenses, and finally you will be able to get your net profit, So you can use the sales proceeds of the byproduct and treat that as a miscellaneous income. Lastly, before we look at an example, and this is what I would want us to use. Lastly, this is the number 3 treatment. Number 3 treatment. You can say use the sales proceeds. Use the sales proceeds from the byproduct. The byproduct, we say to reduce the cost of production. To reduce the costs of production. So the same way we treat normal loss is the same way we will treat what? The sales proceeds from the byproduct. So use it to reduce the cost of production. So your income statement extract would look like this. The income statement, this is how you will present your income statement. So we say sales revenue from, this is revenue, sales revenue from main product, Let me push this one here. So the sales revenue from the main product, then we say less the cost of production. Now this will be the cost of production. I put it here, but then I use the sales proceeds from the byproduct to reduce these sales. So I will say add the sales proceeds from what? From the byproduct, And so I will add it here. Now, when we have a negative, then we add this one, it will mean we have a smaller negative. That means that the cost of production has done what? Has reduced. This was the cost of production. But I have reduced it by the amount of sales proceeds from what? Sales proceeds from the byproduct. And so that value there gives me my net profit. That value there gives me my net profit. So the other way is just credit it in the process account. And when you remember in the process account, we debit all costs. So when we credit it, it actually means that you are reducing the cost of production of the main product. So very quickly, we look at an example. I want to believe that you have printed yours. We are looking at September 2015. And that would be question number 1. September 2015, question 1. If in case you haven't printed, then you have it in your WhatsApp platform, so you can refer to that. Meanwhile, we'll try see if we can be able to share it on the screen. That's September 2015, question 1. So let's read through. We say New Color Limited manufactures 2 joint products, X and Y. A byproduct Z is also produced. Output from the process 1 is transferred to process 2, where the joint products emerge. The following information is available for July 2015. So in process 1, cost data, we have the raw material inputs. These were 40,000 kgs. and their cost was 96.20. Then we have direct wages, have it on the screen, direct wages at 7,650,000, overheads 11,050,000. Then we have the output from that process, which was transfers to process 2, 30,000 kilograms. Then we have byproduct Z, which emerged from that process, and that was 2,000 kilograms. Then the closing work in progress, 50% complete, as to conversion cost 8,000 kilograms. Note 2, byproduct Z retails at 75 shillings per kg. Additional sales costs amount to 15 shillings per kilogram. 500 kilograms were sold in July 2015. Then we say process 2 cost. We say additional direct material, which was 3,852,500. Next, we have direct wages, which is 6 million. That is a 99,609.5. The overheads were 3,828,750. Then next we have what? We have output from that process comprising of finished goods. That is X and Y, which were the joint products, and those were 28,000 kilograms. Losses in the process, 2,000 kilograms. Then the output is produced in the ratio of 2:3 for product X and Y respectively. Normal loss in the process is 2.5%. A scrap value per unit is what? Is 200. The scrap value per unit is 200 shillings. The selling price per unit of each product has been given there. For X, 2,000, for Y, 1,218.75. And lastly, you are told that the joint costs are allocated on the basis of sales revenue at separation point. So we are required to present a statement of production for process 1. Then we'll have process 2 account. So I want you to try and draw process 1 account. Try and write up your process 1 account before we write the statement of production for process 1. So we can write that together, but I also want you to try and write it in your book. Then we can compare our results. So everybody trying to write process 1 account or the throughput account. So I'm also drawing my process 1 account here. Okay. So this is process 1 account, process 1 account, process 1 account. So we have the inputs on this side, then show the units of input, then what was the cost per unit, And finally, what was the amount? Then on this side, you have your output. This will be the units of output. This will be the cost per unit. And this will be the amount column. So remember to debit this account with all the cost, debit this account with all the cost, and then you credit that account with all the sales proceeds, okay, as well as every output from this particular process. So let's read through process one. The first item will be the raw material. So I will call it basic raw material. So we have the basic raw material. The basic raw material, that is 40,000 kilograms. Now the amount you've been given there is 9,620. If you like, you can compute the cost per unit. The next other cost in this process will include what? The direct wages. So bring in your direct wages here, and the direct wages are 7,650,000. 7,650,000. Then we have the overheads. And the overheads were 11,050,000. Let's write that as 11,050,000. 11,050,000. Then let's try to now get our output from this particular process. And the first item I want to show here is the normal loss. So normal loss, read note 5, we are told normal loss in the process is 2.5%, and the scrap value per unit is 200. So I want you to get for me 2.5%, that is 2.5%. We multiply that by 40,000. What will that give us? Okay, very good. I have 1,000 units, 1,000 units. Now, what was the scrap value? The scrap value is 200. The scrap value is 200. So I want you to multiply 1,000 by 200, and I think I will get 200,000, right? I will get 200,000. The next we have the transfer to process 2, So let's say to process number 2. To process number 2, how many units? Transfer to process 2, this will be 30,000 units. 30,000 units. Next we have the byproduct Z. So this is what we are trying to account for. So we say byproduct Z, the byproduct Z, and the byproduct Z, we have 2,000. The byproduct Z, we have 2,000. Then we also have the closing work in progress. This is closing work in progress. Closing work in progress, we've been told, is 8,000 units. 8,000 units. Now, I want somebody to tell me, in this particular process, what will be the balancing figure? Then tell me, is it abnormal loss or is it abnormal gain? Okay, let me see that. Any suggestions? Abnormal gain, very good. So an abnormal gain should be on which side? Debit or credit? Do I debit that value or do I credit? Very good. I debit that value. So we have abnormal gain here. Abnormal gain. And I've seen it's indicated there as 1,000. Now that means that this column on the debit side will now agree with this side here. Okay, so the total of 30 and 32,008 is 40 plus 1. That gives me 41,000. Then this side is also 41,000. So what we have done is we've simply gotten the balancing figure for this column here. So this total is 41 and this total is 40. So we have an abnormal gain on this side, and we'll be looking at how do we treat that? How do we treat that in the statement of production? Now tell me, what are the sales proceeds? What are the sales proceeds from, or what is the selling price per unit? What we want is the net realizable value from byproduct. Net realizable value from the byproduct. So let's read that again. So we say that the byproduct Z retails at $75. Then additional selling cost amounts to what? To 15. So we have the selling price here. The selling price is 75. And then we say less the additional cost for selling that product. Additional cost for selling that product. And the additional cost for selling that product is what? Is 15. So this will give us the net realizable value, okay, or the net selling price. And the net selling price here is 75 minus 15, which is what? Which is 60. So we can call this the net selling price, the net selling price. So we are selling it at 75. However, we have some additional cost of what? Of 15. So what do I want to account for here? I want to say that the sales proceeds from the 2,000 units will be used to reduce this cost of production. That was the last treatment that I looked at. So we will say 2,000 and then we multiply that by 60. So what is 2,000 multiplied by 60? Somebody? 2,000 multiplied by 60. Correct? This is 100 and what? And 20,000. Now remember that only 500 units were sold. But in my account, I'm accounting for what will be the realizable sales, not the actual sales. So that 500 kilograms was sold in July 2015, then I do not use it in my account here. Why? Those were the actual sales. But what am I looking for? I'm looking for the net realizable value. We may not have realized it yet, but we know that one will be able to sell and then we'll be able to realize that particular value. We'll be able to realize this particular amount, which is the 2,000 multiplied by 60, which is 120,000. I hope we are very clear up to that point, because I want to remove this one so that I can be able to write the statement of production. Why I wrote this is to be able to balance the unit column, okay? Then when I get the value of the finished goods that went to process 2, I'll just come and insert the cost per unit here, and then I'll be able to insert the total cost. Similarly, I'll be able to do that here, and I'll be able to do that for the closing work in progress. I'll also be able to do the same for abnormal gain, the cost per unit, and these are valued just like a good unit. So I value it here per unit, and then the total cost will come in here on the debit side. So if you are clear up to that point, then we can wrap that one so that you can be able to write the statement of production. If there's any question, you can just ask on the chat there. So let me try and save this. Okay, we are together. I can wrap this one now. But for you, it's okay. You don't have to wrap. Just move down a little bit. Then we can write the statement of production. Statement of production for process one. So I write it like this. My statement of production column for inputs and the units of inputs. Then I have a column for outputs. Then the units of outputs. Then I have the raw material cost. Then next I will have the cost of labor. And finally, I will have the cost of overhead, the cost of overhead. So this will be inputs. Then I show the units. Then I have outputs. Then I have the units. I divide this one further. Like that. So this will be the direct material. This one will be the direct labor or the direct wages. And then this one will be the overheads. That will be the overheads. That will be the overheads. Now, there was no basic raw material and then material added. That's why I only have one column here for material. If you have the basic raw material, then you have the material added. It means you have to show DM1 and DM2. Or if it is process 2 and you have the transfers in cost and then the material that was added, then you need to have DM1 to capture the process, the transfers in from process 1 as well as what was added in this particular process. So indicate your percentages of completion here together with the units. The percentage of completion and the units, the percentage of completion and the units, So here we have the basic raw material. How many units? 40,000. 40,000. So what you're trying to do is to just duplicate the unit column. So we start with normal loss. And normal loss we said was 1,000, 1,000 units, 1,000 units. The next we had process 2, or what was transferred to process 2. Process 2 we had 30,000 units. Then we have our byproduct Z, and the byproduct Z is 2,000 units. Then we have the closing work in progress. Closing work in progress, how many units? 8,000. 8,000. Now this gives me 31, 33, plus 8 is 41. So the only thing that is remaining in this case is the abnormal gain. Now I have the option of indicating it here as a debit. Alternatively, I have the option of writing it here, abnormal gain, and then I show it as a negative value, meaning it will be subtracted. Okay, these are goods that we had intended to lose that, but we never actually lost them. So we say we gained. And if you can see, my account here again has balance. So this side is 40,000. And this side we also have 40,000. 40,000. I hope that is clear. Okay, I hope that is very clear. So let's get the what? This we called it the statement of equivalent units. This is the statement of equivalent units. Okay, all the three combined statement of equivalent units, the statement of cost, and then the statement of evaluation is what will form the statement of production. So all these will form the statement of production. Statements of production, the statement of production. Now let's get the equivalent units. Equivalent units. For normal loss, we say no cost is attached to it. So the cost is, we say, is borne by the good units produced in that process. So I will simply say 0%, 0%, therefore 0 units, 0%, therefore 0 units. Now for what was transferred to process 2, we say must have been 100% complete as far as material is concerned, 100% complete as far as wages is concerned, 100% complete as far as overheads are concerned. So we say 100%, and 100% of 30 will be 30,000. Then we also have 100, and 100% of that is 30,000. Then we have 100% of this, and that will give us 30,000. 30,000. Clear up to that point? Now, byproduct Z, we've said again, the proceeds from this will be used to reduce the cost of production, of the main or of the good unit produced. So again, just like we've said for normal loss, no cost will be attached to it. However, the sales or the net realizable value from the byproduct will be used to reduce the cost per unit for good production. So again, here we can say this will be borne by the good units produced. So put dash, 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 meaning 0%. And so 0 number of units, 0%, 0 number of units, and so on. As far as closing work in progress is concerned, there was a note. We've been told that this was 50% complete as to conversion cost. Now, we defined conversion cost as direct wages together with overheads. So as far as material is concerned, this material was basic raw material, meaning that it was added at the very start. You know, some things like wages and overheads will be added uniformly as the process progresses. So as far as the percentage of completion is concerned for material, we will still use 100% since all material has already been put.